Tesla could drop another 60%, but that might be exactly why it's about to win. Hey everyone, Ken here. Today, I want to walk you through Tesla from three critical angles: the stock, the strategy, and what's really happening beneath the surface. Because right now, the situation looks confusing. On one side, we have bearish headlines, falling stock prices, and major institutions warning about downside risk. But at the same time, Tesla is seeing explosive growth in key global markets. And if you understand this gap, you'll start to see Tesla very differently as a long-term investor. Let's start with the stock. JP Morgan Chase recently issued a strong bearish call on Tesla. They're not just cautious, they're outright negative. They've put a sell rating on the stock, cut their earnings expectations, and warned that Tesla could have as much as 60% downside from here. And the market is reacting. Tesla's stock has been under pressure, and sentiment right now is clearly not bullish. If you just look at the surface, it feels like something is breaking. But here's the key point most people are missing. All of this analysis is based on one assumption, that Tesla is just an EV company. When you evaluate Tesla purely on vehicle deliveries, demand trends, and pricing pressure, the concerns make sense. Growth is not as explosive as before, competition is increasing, margins are under pressure. So yes, if Tesla is just a car company, the bearish case is logical, but that's exactly where the mistake is happening. Now let's look at something that, on the surface, seems negative. Tesla is effectively ending the Model S and Model X era. Production is being phased out, inventory is limited, and prices have increased by around $15,000. This is likely the final stage for these vehicles, and a lot of people are interpreting this as weakness, as if Tesla is retreating from the premium segment. But I see it differently. This is not a retreat. This is a completion. Model S and Model X were never meant to be permanent pillars of Tesla's business. They were proof of concept vehicles. They proved that electric cars could be fast, desirable, and technologically superior. They built the brand. But now, Tesla no longer needs that validation. The center of gravity has shifted from luxury to scale, from vehicles to systems, from EVs to AI and autonomy. And this is where things get interesting, because while the narrative in the US might look weak, the global picture tells a completely different story. In South Korea, Tesla has become the #1 imported car brand. In Germany, registrations have surged by roughly 4 times. Think about that for a second. If Tesla were truly losing demand globally, these numbers wouldn't exist. So what's actually happening? Tesla is not slowing down, it's becoming more selective. Instead of trying to win everywhere at once, Tesla is focusing on markets where it can dominate, where the economics work, where the infrastructure supports EV adoption, where demand is still strong. This creates a very unusual situation, because depending on where you look, Tesla either looks weak or incredibly strong, and most investors are only looking at one side. Now let's zoom out even further, because there's another signal that I think is being completely underestimated. Xiaomi has recently hired Tesla's European delivery operations leader. At first glance, this sounds like just another executive move, but it's not. This is a signal. The nature of EV competition is changing. In the early days, the competition was about the product. Who had the better battery, the longer range, the faster acceleration? But that phase is over. The next phase is about execution, about logistics, about scaling production globally, about managing supply chains, delivery networks, and customer experience at massive scale. In other words, this is no longer a product war. It's an operational war. And this is where Tesla has a very unique advantage. because Tesla is not just a car manufacturer, it's a vertically integrated system. From software to hardware to data to distribution, most competitors are still fragmented, different suppliers, different software stacks, different organizational structures, and that makes scaling extremely difficult. So when a company like Xiaomi starts hiring Tesla's operational talent, it tells you something important. They're not trying to copy the car. They're trying to copy the machine behind the car. Now let's bring everything together, because right now Tesla exists in two realities at the same time. On one side, it looks weak, the stock is down, analysts are bearish. EV demand looks uncertain in some regions, but on the other side, it looks incredibly strong. Sales are accelerating in key markets, the company is refining its global strategy, and the competitive battlefield is shifting in a way that favors Tesla's core strengths. So, what is Tesla right now? Is it declining or is it transforming? This is the question that will define whether you make or lose money as an investor, because markets often misinterpret transition phases. They see change and assume weakness. They see volatility and assume risk. But sometimes what looks like weakness on the surface is actually repositioning underneath. And historically, the biggest opportunities come from these moments, not when everything looks perfect, but when things look uncertain. Right now, Tesla is not a simple story. It's not a clean bullish narrative, and it's definitely not a clear bearish one either. It's a company in transition from EV leader to something much bigger. So the real question is this: are you evaluating Tesla based on what it was or based on what it's becoming? Because long-term investors don't just follow headlines. They look for structural shifts. They look for asymmetry. They look for moments when the market is confused. And right now, the market is clearly confused. Tesla closed today around $342, breaking below the 350 level. Short term, the pressure is real. There's no denying that. But long term, this might be one of those moments we look back on and realize the story was changing, and most people didn't see it yet. If you found this analysis valuable, make sure to subscribe. I break down Tesla every single day, not just from the news, but from a strategic perspective. Thanks for watching, and as always, let's keep building our understanding of the future. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.